worry about inflation. We worry about inflation because it seems that central banks don't have control over inflation. It's very difficult for them to spur inflation. What will it take for inflation to come back?
Well, there's no magic formula in any of this. And, in Japan, for example, if you look at the situation in Japan, they pegged their monetary policy to a 2% inflation rate. But what's happened is, on the one hand, it's good because oil and gas prices are lower, and it helps them. But on the other hand, it keeps inflation down. So, right now, supply is very high, and many countries have reacted to the low commodity prices by producing more. So we don't really see the end of low commodity prices anytime in the near future, and we're watching this very carefully. Of course, that creates even more headwinds for Latin America, certainly, but for many emerging market countries.
What's your biggest concern for emerging markets? As you say, they're very linked to commodities. The commodity, prices are, we don't see them going anywhere, anywhere fast, or at least not on the upside. How concerned are you that a small policy misstep, possibly from the Fed, will really hurt global growth?
Well, so among the things we're concerned about, we're just reading today that the capital flight out of emerging markets is the largest we've seen in almost 30 years. That's a big worry. The commodity prices are a big worry. And the Fed fund rate rise is going to happen sooner or later. And when that happens, we also know that borrowing costs are going to go up even more. They're already very high. We're already hearing from many of our clients that capital, which used to be very easy to access, for example, Zambia went on the markets and got 8-year money for 6%. That's just not happening now. And so we're seeing it because the call for our capital, our business is just exploding, and it will continue to go up. We can still provide 15-year money at 2-3%, which is a great deal for developing countries. And whereas they liked going to the capital markets before because it was quick, it was easy, there were no conditions, right now we're going to see a lot of headwinds, especially in access to capital. That's a big, big issue. Developing countries have to get serious right now. The one thing,
structural reform, you mean?
Structural reforms, there are several levers. First of all, they've got to really make sure that their public spending is as efficient as possible.
Right.
It's very important for them to continue to invest in health and education, but they need to get more for their money. Productivity is a huge issue. There are all kinds of things that they can do to improve their business environment. They're going to be compared now across the board, and those who get capital are the ones who move most quickly in terms of making the reforms. And also, de-risking is happening everywhere, and so small entrepreneurs, even large entrepreneurs in developing countries, don't have access to capital. So we have a role to play, and in terms of making sure that the financial sector in these countries is a bit stronger than what it looks right now.
Do you worry about a global recession? Citigroup had a note out saying 55% chance in 18 months. That seems extremely high. We speak about Glencore, and we think that may be a systemic risk. How worried are you about a global recession?
Well, all those factors that I told you about have got us very focused on making sure that the developing countries can respond. One really good thing is that if you look even 10 years ago or 15 years ago, the developing countries today are overall much better prepared.
Right.
So countries have a lot more fiscal space than they did before. Management of monetary policy is much more effective than it was before. So we think they're more prepared, but we're also quite struck by how strong the headwinds seem to be blowing. There's been a change even in the last couple of months in terms of the movement of capital out of emerging markets. So this is going to be a very intense few days where we're really trying to help countries send signals. What we've been saying is that, the structural reform, sure, the impact is going to be in the medium and the long term, but if you don't signal now that you're serious about it, your short-term borrowing costs may go up as everyone is painted with the same brush. Countries have to distinguish themselves. Be clear, let the capital markets know that you're on the path to reform, that there's stability in policy making, and that you're serious about adjusting to the new reality.
We talk a lot about the refugee crisis. Is the root of the problem, of course, being the wars? How do you deal with it? Is this a political response that we need?
One of the things that's happening that's very important, at the UN General Assembly, I had a chance to talk with at length with Prime Minister Cameron, with Chancellor Merkel, and what we're now trying to do along with the U.S. government is something that President Obama has been very concerned about. We need to change the way we respond to these kinds of crises. The average life of a refugee, as a refugee, is 17 years now. So we can't think of this as a short-term political fix or even a humanitarian response. We're now working with the United Nations. I've been traveling with Secretary General Ban Ki-moon to go to these conflicted areas because we want to link the political response and the humanitarian response to the development response. We have to think differently. We're trying to come up with completely different solutions, for example, for Syrian refugees in Jordan and Lebanon, so that they have jobs, so that they have better education. And if they have access to those things, they're much more likely to stay there than to risk their lives by getting on these boats.